Good morning, fellow option traders. This is Jeff, and welcome to the daily scan for Friday, May 17th, 2013. Well, the market did dip a bit yesterday, and let's take a look at some of these announcements that were kind of surprising. The consumer price index is not really very telling. Month-to-month change of the CPI was a minus 0.4, and what they call the core was actually a plus 0.1, so that is pretty flat. So less food and energy, 0.1, but there's a couple of other ones here that were sort of disturbing. Housing starts prior was this number. Consensus was right around the same thing as the previous month, and the actual was down quite a bit. And then here they say that permits were unexpectedly optimistic. I don't know, they always come up with an excuse here somehow or another. I think the number in itself is just telling. I don't care what the consensus was and what they thought it was going to be, but what it was the previous month and what it is this month is pretty telling to me. Also, jobless claims. Here they were expecting around the 330 range and actually came up 360. So to me, and then some grumblings about the Fed wanting to start to ease out of their QE makes me a little bit concerned about what's going on or what could be going on in the market. So we have to keep an eye on our backside. We have to watch our backside is the way that I would put it. And I forgot to shrink these windows down, so let me bring this into focus here. And the same thing with the charts. Bring this into focus. Alright, so I wanted to let you know first off, right off the bat, that I did exit the Iron Condor, or not the Iron Condor, but the calendar for on IWM. Let's take a look at how that ended up. So just to summarize, historically, we opened the double calendar at 87 and 91 strike prices back in March 5th of this year, and then this short was at the the 5th expiration Friday in March. So I rolled those to April and made a little bit of money, helped pay for these initial opening prices that I have here. So I rolled them March to April to just the second Friday in April, not the regular April expiration, but the second Friday in April. Then when those expired, I just sold my long 87 strike that had a June expiration on it. And then after the 91 short April 4th expired, or April 4th Friday in April expired, I sold a May 91. And so this is, I got $1.59 back on this particular one here, and it cost me, or I collected $1.95 on this short here. And then yesterday I closed them both. I closed the shorts that were at right about a half a penny a piece for a midpoint. So I got I sold those transaction free, so that's why I did those separately. And then I bought those back transaction free, and then I sold the June 4th longs. And these are all the prices that I got. This is a download directly out of the Thinkorswim platform. And you can import that into a spreadsheet, and that's what I did. I just took some columns out here that I didn't think would be very interesting. So this is the actual data. So my P&L for those trades was 94 cents. And then the commission, I pay $1.25 per contract. So this is the total commission was $27.50. So my net profit and loss on that particular trade, or those double calendars, was $66.50 after accounting for everything. So that's an interesting thing. It was fun to play with that. I'm not going to get rich off of that particular trade, but you can imagine if I would just bump these lots up to, instead of 2, if I would bump them up to 10, which is what I'm going to do for a simulated trade in the coming weeks and months on IWM. I'm going to pump things up a little bit, and then I'm going to do some insurance on each end, and we can cover that in a moment. So what I am going to do today, I'm not going to do a scan because I am fully invested. I'm happily invested, I guess you might say. I'm not interested in opening any more positions. So we're just going to take a look at what we currently have, and then we'll take a look at the idea that I have for an IWM trade. Alright, so let's take a peek at pre-market. Looks like as though we might open up. Gold is still plummeting, I guess you might say. And I don't think that outside of exiting IWM yesterday, I don't think I really did anything else. Let's take a look here. I got into Apple yesterday, and then I got out of IWM. So I think that's it for yesterday. So I did open an Apple. We'll take a look at it here. I opened an Apple bear call, and of course Apple decides, it went down in the morning and then decides to come up the rest of the day. So actually, right away at the open it was dropping way down, and then it just continued to climb the rest of the day and leveled out around lunchtime. So that was an interesting day yesterday for Apple, but I did get in, and here we are at the 450 strike for my short. So that's Apple. Can knock this down here. We'll take a look at Amazon. Amazon is an Iron Condor. We're looking pretty good on that. Nothing to really worry about. We have a delta of 9. Let me reset these. So we're all right with that. We're waiting for this to start building up our bank account. Baidu, we got out of, Baidu, we have a June bull put on this one. We're looking for, prices to stay above this 87.50 mark. And I think we're pretty happy with that particular one at this time. Gold, GLD, and we're looking at a bear call there here at the 142 level. And we're pretty happy with that one. It's not making us rich at the moment, but it's a pretty new trade, and that one will start to pay off pretty soon as well. And IWM, we'll talk about that in a moment. LinkedIn. Okay, here we go. Finally, LinkedIn, we have a June 160. bull put on this. So we are bullish on that particular trade. I think I'm not worried about that one at this time either. MasterCard, I had a couple of trades on that. And we actually have an alert here. I was looking to decide if I wanted to get out of the call side of this Iron Condor for June. And we have our alert sitting here, so we'll just wait to see if that alert goes off or not. Netflix. Well, Netflix finally gave up a little bit of a few points yesterday, but still pretty safe. Nothing to worry about there. Panera, same thing, pretty safe. Nothing to worry about there. And RUT, we have this double calendar. On this, it's a 970-905, I believe, double calendar, which managed to collect a little bit yesterday when the market pulled back. This is our insurance policy, and it is a July-August, so we have a lot of time left on this one. We'll just keep an eye on it. Visa, we have a bull put on that one as well, so we're pretty bullish overall. The news was pretty bearish yesterday, and there's still some turmoil in Washington, so just saying you got to protect your backside. So here's my idea on IWM. I was working on this earlier this morning, and what I'm going to do is after the market opens today, I'm going to unlock each one of these, but I'm going to let you know what I was thinking when I did this. Alright, first of all, I just picked strikes at the 20 delta, so we can go back here and we can look at, we're looking at 93 and 102 for June. So 93 is a 20 delta and 102 is a 20 delta as well. So that's all I did, was I just picked these. I went in with 10 of them, and here's where I would stand. This is $970 possible profit out of this. And I'm going to reset these slices here and make sure we're right here. This is June expiration, okay. So we could, risking $4,000, make 970. So that's about a 4-to-1, or 1-to-4, or 4-to-1 risk-reward ratio, and that's not too bad. I've done them as bad as 10-to-1, but then your probabilities are much higher if you do something like that. But this is sort of a tight range for this time period, but that's okay. So let's move our strike prices to, well, let's just say here, set slices to break even on 622. So that's where our break evens are. Then I thought what I would do is I would tack a calendar on right away on each end in case it moves against me. And what I decided was to put one on at 104, and it would be July, August, and another one at 90, which would be also July and August, only I made it 2. I did 2 calendars instead of 1. So this is going to cost me in my overall profits, but not all that much. I'm still looking at almost 4-to-1 risk-reward ratio. It doesn't do anything to my break-evens. That's why I set the slices out there. It doesn't really improve my break-evens. A little bit down here on this end, and not even much at this end at all. Let me just stretch this out a little bit, and maybe we can see it better. And yeah, so you can see it moved the break even just a tad this way, and actually made it worse on the high end. But my thinking behind this is that if the price does start to move against me, then I would exit that side of the Iron Condor and play the calendar side of it. So it would, the calendar itself, by itself, looks like this. And that's not pretty, and you would say, why the heck would you do something like that? Well, I may not do, maybe the call side is dumb, I'm not sure, but you know, if price moves up, volatility is going to drop even more. I mean, it can't get much lower than 15 actually anyway on these calls, but it will actually drop a little bit lower, and this may be a waste, but this is an experiment and I want to keep an eye on it. And on the put side, or on the downside, of course, volatility is going to increase, and then I would close the put side of this Iron Condor and play the calendar right off the bat. So I'm actually sort of hedging this position, I guess you could say. Maybe there's a different idea to hedge the call side or the bullish side of this. I'm not sure. Whoops. Sorry, bumped the microphone. So if anybody has any ideas about that, I'm open to them. But this is where I'm going to sit with this for right now. Again, the entire trade looks like this. I'm going to reset my slices. And like I said, after the market opens today, I'm going to unlock these and then relock them down as if I had made the trade. And we'll see how it works out. I think it could be a lot of fun. We'll see if we can eke any money out of this thing at all. So it's like a self-hedged combination of spreads here, and let's watch it for the next month or so and see how it works out. Is there anything else that I wanted to cover? No, I think that's it. I have nothing else in my notes. All right, so gang, that's it for today. Recording wasn't too long, so thanks for watching. Have a great day and happy trading.